How's everyone doing today? We'll just wait for a few more seconds as we're having everyone trickle in. In the time being, there's going to be some housekeeping items. This is a recorded webinar. In case you have to step out, answer a phone, answer an email, have lunch, some additional lunch, by all means, we'll be able to email you the recorded webinar through our YouTube channel. Also, if you have any questions, I encourage you to put them in the Q&A. And throughout the presentation, I will be speaking to Lillian and asking Lillian your questions. So I'll be your moderator. Also, this is a good opportunity for you to introduce yourself, what type of business you have, where some accounting challenges that you're experiencing. Like this will be more interactive and more conversation for you in today's webinar. Also, we have Krista Hermanton from Startup FIU Local, as they're one of our co-partners in this exciting program, the Miami-Dade Business Navigator. Also, Krista will be able to put her contact information if any of you are interested to participate or know more about the Startup FIU procurement, the Startup FIU Local, and all the exciting programs and events that they also have to offer as well. So I want to thank you all for attending this afternoon's Basic Accounting in 60 Minutes. And I'll give you a brief description of what is the Miami-Dade Business Navigator program. It is funded through a cooperative agreement through the U.S. Small Business Administration. It was established in part of the American Rescue Plan Act of 2021 to assist you, the small business owners, in the recovery during the pandemic. And it's comprised of a lead hub. In this case, it is a Florida SBDC at FIU as a center, working with spoke organizations that deploy community advocates to work with small businesses. The overall goal is to assist you, all small businesses, with a sole focus placed on businesses owned by veterans, women, as well as socially and economically disadvantaged individuals. Including with the Startup FIU procurement and the Florida SBDC at FIU, we have 6 other organizations that can also assist you at no cost to you. We have Ascendis, Branches, the EDC of South Miami-Dade, the Miami-Dade Chamber of Commerce, and Prosperidad. So all these 7 organizations are available to assist you at no cost, as the services is confidential as well. And the sole focus is to create that local community navigator network that assists the small business owners in business consulting, mentoring, and training. Also, this program is for the Miami-Dade County businesses, but don't worry if your business is located in Palm Beach, Broward, Monroe County. We'll be able to give you additional resources and also assist you with those business needs. Now, if your business is located outside that jurisdiction, I will put my contact information and I'll be more than happy to connect you with your local small business assistance or resource partner that we have throughout the entire country. And also, I encourage you to follow us on our social media, our YouTube channel. That is when we have a plethora of content from different topics of how to start your business, marketing, government contracting. I encourage you to like and subscribe. I'll put the link at the chat, because that is where today's recording will be uploaded afterwards. By all means, send us an email, visit our website, follow us on social media on how we can assist you with and address some of those challenges that you're experiencing, and how can we help you to accomplish your 2023 goals as well. So without further ado, allow me to introduce you to Lillian Urbant, as she is today's presenter. Lillian?
Good afternoon, everyone. As Jesus mentioned, my name is Lillian Urbant, and I'm an accountant by trade and a tax practitioner by trade, doing it for many years. But although I do this work every day, we have to put, the first thing we have to show is a disclaimer, providing you with information that is intended only to the insight of basic accounting faced by small businesses owners. As it is not possible to cover all scenarios and circumstances, there may be other considerations or steps that you will want to follow, which are not included in this webinar. For assistance in better understanding accounting principles for your business, it is highly recommended that you become familiar with the Financial Accounting Standards Board. Usually we call them the FASB, which is an independent non-for-profit organization responsible for establishing accounting and financial reporting standards for companies and non-for-profit corporations in the USA, following generally accepted accounting principles, which is also known as GAAP. GAAP is a set of standards that companies, non-for-profit companies and governments should follow. I would say must follow when preparing and presenting their financial statement, including any related party transactions. To add to this disclaimer, I would just like to tell you that if you follow GAAP, you will have no problem. And this is where we come in. We are here to help you and to teach you how to do and maintain the books properly. Let me just go over what are accounting principles. What are accounting principles? Those are the rules and guidelines that companies must follow when reporting financial data. These rules make it easier to examine financial data by making it a standard, the terms and the methods that all of us accountants follow, and now you will be following with our guidance. The accounting principles ensure that a company financial statements are complete, consistent, and compatible. This makes it easier for investors to analyze and extract useful information from the company financial statements, including trend data over a period of time. This is really good when you're going to a bank, right, for a loan. They use all the guidelines that GAAP provides. Accounting principles facilitate the comparison of financial information across different companies. In other words, every company has an industry, and you can see which within the industry, the comparison can be done to see where you stand. Also, accounting principles identified and increased transparency and allows red flags to be identified and eliminates accounting fraud. This is where we come in within the SBA Navigator program, where we teach you to read those financial statements so that you can be aware of what is going on in your business. Accounting standards is very critical for ensuring that management, bankers, investors are not led off track by misleading financial statements. What is accounting? Accounting is just a system. It's a system of recording and summarizing business and financial transactions in a report, which are called financial statements, to analyze, verify, measure, and quantify financial information to make informed business decisions. The key word, informed business decisions. If you learn how to read those financial statements, because you're summarizing, you're recording that information, you will be able to analyze and where you stand. An accounting system identifies, records, and measures accounting transactions by a system known as a double entry accounting system. We will cover this double entry accounting system later on the PowerPoint presentation. Transactions are composed of debits and credits, and the debits and the credits must be equal for the same to remain balanced. I will go over that information with you with an example. The father of the double entry system of accounting is Luca Bartolomeo, the Piccioli. I love that name. He was the first person to publish detailed materials on the double entry system of accounting. We're talking years and years ago, and it worked so well that we still do it. And it's not only in the United States, it's all over the world. He was an Italian mathematician and Franciscan friar. Let's talk about the different types of accounting. When you think about accounting, you only think of the word accounting, but they are very different type of accountings. Some of them are financial accounting, managerial accounting, cost accounting, auditing, which is totally different to prepare, and tax accounting. Financial accounting is the process of compiling information from financial report for external reporting. How do you do that? Through the bank statements, through the receipts. We will go over that later on. Managerial accounting monitors and assists an organization's financial planning. It is meant for internal stakeholders rather than the public. Managerial accounting is more like what we will be teaching you within the SBA Navigator program, how to read them internally before you present it to a bank, so you understand where you stand with your financial statements. Cost accounting, very important, is used as a subcategory of managerial accounting because it provides detailed data on how much a product costs. If you produce a good and you buy materials, raw materials, we need to find out how much it costs you to see how much you're going to sell it for. And that's where cost accounting comes in. Auditing, external auditing, is the action performed by an external company for a company providing financial documents to a third party for financial gain or feedback, such as a loan. Auditing is very, very expensive because it's done by an outsider that has to have the licenses to do that. Before Enron, I don't know if you guys remember Enron years ago, with the same person that it was in charge then is the same person right now that is with the FTX scandal that we have right now. Auditing, like I said, is very expensive, but it's good. It's good to have. For a small business, I don't recommend doing audits unless you are requested to do so, but you're talking in the area from over $5,000. Tax accounting, this is what we do. Tax accountant assists businesses to stay in compliance with the IRS when filing their tax returns. One thing is doing, let's say, financial accounting, but tax accounting is doing the extra things that we do to make sure that we're reporting accordingly to the IRS code. Tax accounting is done by usually tax professionals, tax preparers, where they can assist the companies in planning for future tax returns. Let me give you an example. If you have an LLC, you're not supposed to be in payroll, but there are ways of doing it correctly without committing any fraud so that you can benefit and be within the IRS code, such as understanding the implication of certain tax decisions. That's exactly what I was talking about.
Lillian, before we proceed, I have a question. In which category does court accounting fall into?
Which accounting?
Court.
Court. When you go to court, that is a different type. That is, what do you call this? Give me a minute. Forensic accounting, which is not mentioned in here. Okay. I am registered with the court to do forensic accounting as a witness, but this is a little bit more detailed and it was not included in here, but you're right, Jesus, I should add it. Forensic accounting, that is not done by specialists that we are registered with the court.
Okay, awesome. Thank you.
Okay, how do you keep track of your accounting? You have to, as a matter of fact, there it is, forensic accounting, the second bullet point. But let's talk about the first bullet point, which is accounting information system. What is any accounting? There's several accounting systems, but the most popular at this time is QuickBooks because it's very easy to use. You don't need to be an accountant because the only thing that you do is enter the information as if you were writing a check. It's a little bit more complex if you're in the accrual basis of accounting because you have to enter the invoice, you have to apply the payment and make the deposits. And again, that's where we come in and we emphasize on training the individual to learn how to do it. It's not for us to do it, but to teach you how to do it so you become independent. And also, if you have a CPA, a bookkeeper, an accountant, just by reviewing the books, you can see if it was done properly or not. So accounting information systems will be just a system like I mentioned to you before, QuickBooks. Forensic accounting is used to investigate the financial records of individuals or businesses. Usually when you go into forensic accounting is because something already happened and we need to go in and investigate as to where the money is. The mission of forensic accounting is to gather all available documentation and correctly and carefully account for all transactions in the company's financial statements. Now, public accounting, those are the large four CPA firms. These companies provide accounting advice or assist with auditing, preparation of tax return, and installation of technology or computer programs. I used to work for PricewaterhouseCoopers, and I was in the tax department. But I did see a lot of auditors, and let's say we went to a business, it will be the accounting team, the tax team, and I never saw the IT department within PricewaterhouseCoopers, but they do have it. I was not privy, I was not part of that department. Governmental accounting, usually they develop accounting procedure for local and state governments. And whoever's handling those books, they must comply with the Federal Accounting Standards Advisory Board, FASAB. The language of accounting. I'm going to make it short. Learn the jargon. When you communicate with your CPA, it's easier once you learn, and that's where we come in. We teach you the jargon. In business, there are three languages: accounting, finance, and economics. While other areas in businesses are important and essential, such as human resources, marketing, operations, the other departments within a business decisions are made by interpreting the financial statements, meaning we are in the accounting department. That should be one of the departments that you need to concentrate on, making sure you learn from us on how to do it properly. How do we teach you? We teach you how to enter the information, and then we teach you how to read the, QuickBooks gives you the financial statements, gives you the balance sheet, the income statement, and the cash flow statement. The most common ones are balance sheet and income statements. Accounting plays a vital role in running a business because it helps you track income and expenditures. You notice that I used the word expenditures. I did not use the word expenses. We'll teach you about the difference between expenditures and expenses. Not in this class, but hopefully in another class. I believe we have another class in February. Ensure statutory compliance and provide investors, management, and government with quantitative financial information to make business decisions. I go back again. If you have a good set of financial statements, you're on your way to get a loan. Of course, there's other things that you have to meet certain requirements to get a loan, but if one of them is to have great financial statements. It is critical to understand your client, where they stand with demands and how they will supply that demand. Meaning, whatever business you're in, whatever industry you're in, get to know your clients, pamper them, see what they need. That's competition, and that is great to get those financial statements, to get that profit and loss and a positive net income status. What is that your clients prefer to do? To buy, and for how much? Competition. What do you do? How do you sell your products? The sum of habits, they need to be done. If you're in when we teach QuickBooks, usually we assist the client and we teach them how to link the QuickBooks to the bank accounts or the credit cards. That is very easy to do if you're in the cash basis of accounting. But if you're on the accrual basis of accounting, there's additional steps that you have to make so that you can match with information that is being downloaded from the bank. If you're on the accrual basis of accounting, you should enter the bills and categorize expense accordingly. If you are entering an invoice for your clients, you have to enter that invoice. When you have an invoice from a vendor, I usually like to make the difference of calling it a bill. If you have a bill from a vendor and you're going to pay, it's 2 steps. You enter the bill and you pay the bill. Now, for the invoices for the clients, I like to call it invoices, because you're billing, you're sending your invoice to the client for whether you sell them an item or some sort of service. What's the procedure if you're on the accrual basis of accounting? You have to record the payment you received on the date of the check, or the date it was a sale, which is very popular nowadays, of the date the sale hit the bank. And then you had to make the deposit. It's a 3-step process. When it comes to inventory, you have to receive the inventory. How do you receive the inventory? Maybe there's a PO standing. You get the bill from the vendor and you convert it into a bill, and that bill hits the inventory in the balance sheet. You need to also, whether you're in the cash basis of accounting or accrual basis of accounting, always reconcile the bank accounts and the credit cards every month. The same as the petty cash. A lot of people have a little bit of petty cash, $100, $200. It doesn't matter how much you have. It has to balance against receipts, because if you have $100 and you get yourself a little coffee for $5, which is expensive, $5 for a coffee, you have to report it, but make sure that that coffee is for some sort of meeting that you were having with a client, because if it is for your personal use, you should not be using the money from the petty cash. Once you have reconciled the bank accounts and the credit cards, everything is kosher, you should run a general ledger just to make sure that when you code it, the expenses or the expenditures, they were recorded to the right type of expense. When it comes to managing bank feeds, that is the linkage you do between the bank and QuickBooks, so that you can post it and record it to the right expense account, to the right expenditure account. I recommend to work with your tax preparer for tax compliance. It is very important to allow us tax practitioners to tell you what you should be doing, but that doesn't mean that you're going to go 100%. You should do your due diligence. In my case, what I do with my clients with the Navigator program is I send them the IRS code, and whatever there's I can feel when they are not sure because their accountant told them this and they're doing something else. I don't do that. I send you the code, let you verify it yourself. Work on your books at least 1 hour per day. That will minimize the work at the end of the month. And you will remember many times, I ask, what was this expense for? Oh, I don't remember. Do you have a receipt? No, I don't have it. Important, save all your receipts, no matter what it is, because your accountant is going to ask you. And the beauty of QuickBooks is that you can attach that receipt to the program, so it never gets lost. Prepare, and then at the end of this wonderful process of doing billing, invoicing, reconciling, reviewing the general ledger, talking to your CPA, accountant, or bookkeeper to make sure you're coding correctly, we prepare the financial statements. I touched a little bit before about cash basis of accounting, accrual basis of accounting. So just let me tell you what cash basis of accounting is. It's very simple. The revenue and the expenses are recognized at the time of the cash. When cash changes hands. If I pay a bill that is dated December, but I paid it in January, that expense is for January because I'm on the cash basis of accounting. I paid it, cash came out of my bank account in January. If I bill someone if I send an invoice to my clients in December, but they pay me in January when I'm in the cash basis of accounting, that income is recorded and reported to the IRS in January. The accrual basis of accounting is the best one. I like accrual basis of accounting because it allows you to see where you stand with your invoices, your billings, how much you owe, how much they owe you. And if you are reporting your taxes on a cash basis of accounting, it's just a click of a button. You do your accounting on the accrual basis of accounting. It's a little bit more work, but at the end of the day, it's better. And then when you send the reports to your accountant or your CPA to prepare your tax return, the company's tax return, it's a click of a button, cash basis of accounting, no problem. And a hybrid is a combination. The IRS is kind of picky on the hybrid because the IRS will accept the hybrid method if the combination of the cash and accrual methods of accounting clearly, this is very important, clearly reflects your income and you use it as consistent. So you cannot make it so that 1 year, because you don't want to pay taxes, you move to the cash, and the next year you move to the accrual. It's a combination. As the owner of the business, and this is where we come in, you have to have the basic understanding of the 3 key financial statements, which are the balance sheet, in that order. Balance sheet comes first, income statement second, and cash flow statement third. Remember, we were talking about the debits and credits. This is a little bit complicated if you do not understand what debits are and what credits are, but this is very simple. If you memorize this, you have it made. It's also called the T account. Always the debits are on the left-hand side and the credits are on the right-hand side. It does not matter whether it's an asset, a liability, or an owner's equity. What matters is if it is on the balance sheet, the assets, we have assets, liabilities, and owner's equity. All the assets would always have a positive amount on the debit side of the T account. Liabilities always will increase on the right side of the T account, and it will have a credit balance. So assets will always have a debit balance, and liabilities will have a credit balance. Now, owner's equity has to be as well credit balance, always, as long as the owner's equity is increasing. But this is where it comes a little bit complex, that, for example, an asset, let's say the bank, right? You have $100. What would be, on what side of the T account would those $100 be if it is an asset, which is the bank account? It will be a debit. But if you take out $50, you have to put it as a credit because it reduces the asset by $50. So you balance, when you look at your balance of your bank account, which is an asset, it will be $50. Again, I like to teach this on a one-to-one when I go over with the clients with journal entries. Usually in QuickBooks, you don't use this because the system, deep inside their system, they do it. But if you have to do journal entries to recognize depreciation or adjustment to some accounts or amounts, that's where we use the T accounts through a journal entry. And just to give you an example, as you noticed before in the prior slide, it showed that you have the assets equals liabilities plus owner's equity, right? So on the asset side, we have several assets. We have the cash, could be the petty cash, or also includes the bank accounts. I personally like to keep the petty cash separate from the bank accounts, and each account should have its own number. Then we have, as a current assets, we have accounts receivable. Even though you haven't collected the money yet, that's an asset for you. You have, eventually, you're going to get that money. So that's what's considered an asset. Then you have a reserve for bad debts. Bad debts is a good thing and it's a bad thing. It's a bad thing because it means that people are not paying you. But you have to put a little reserve in there just to say, okay, I have $100,000 on inventory, on invoices, but I don't know if all of them they're going to pay me. So we do a journal entry with the T account, debits and credits, to put something on the side, just in case we don't get that money, which it gets reversed in the next month or next year. Usually the reserve for bad debts, it is done. There's some procedures within the IRS codes that you have to follow. X number of months, X number of periods. And then another asset is the merchandise, the prepaid expenses, and notes receivable. Then we also have the fixed assets, everything that it belongs to the business, the automobiles, the furniture, the fixtures, the equipment. If you have a building, if you have a piece of land, when I say you, I mean the business. And then we have other assets like goodwill, that also has a value. It has a value, especially when if you're trying to sell the business. So that gives you a total amount of assets. That's half of the balance sheet, total assets. Then on the second screen, we have liabilities and the equity account. Remember that it said on the prior 2 slides before, it says assets equals liability plus owner's equity. Well, this is it. This is the other half. And then we have under current liabilities, we have accounts payable, sales tax payable, payroll taxes, accrued wages, unearned revenues, short-term notes payable, short-term bank loans payables. Then we have, those are the current liabilities. Then we have long-term liabilities. We have long-term notes payable, mortgage payable, if the business owns a property or an investment property, and that will be your total liabilities. Then we have the owner's equity account, and here, this is from CCH, which is a company that provides this type of examples, which are fillable. And you have, on the owner's equity, you have the owner's equity account, and the net profit that comes from the profit and loss statement. And that will be the total liabilities plus the capital, the sum of the liabilities, whether they're current or long-term, has to add up to the sum of total assets. And here we are, we have the profit and loss statement. The profit and loss statement has revenues, cost of goods sold, and expenses. Very simple. Now, within the revenue, we also have gross sales. We have sales returns and allowances, people returns, whatever you're selling. Usually this is when you sell something tangible. And then we have the cost of goods sold, where you have your beginning inventory, you add your purchases, you add your freight in, your direct labor, your indirect expenses, minus the ending inventory gives you the cost of goods sold. Now, the revenue minus the cost of goods sold gives you a gross profit or gross loss amount. Next. And then we have the expenses. This is just an example of some of the expenses that your company may have. Again, when you set up QuickBooks, if you don't have it, it allows you to select the right type of accounts that you should have, and these are just mainly the ones that I would say 99% of the companies use. But that doesn't mean that if you need it more, we'll add it to them. Very easy to do. And other income is something that you don't do every day. You don't every day receive interest on your bank accounts. You know, some people have a little bit, they have their bank accounts, they have enough money and they earn interest. That's where interest income comes in. You're not in the business of buying and selling, unless you are in the business of buying and selling, let's say, computers. But if you buy a computer for the business to be used in the business and you get rid of it or you sell it, there might be a gain or loss on the sale of that asset, meaning sale of the asset that you use in the business. And that effect gives you the net income, you know, the revenue minus the cost of goods sold, minus the expenses, minus the other income, could be positive or negative, gives you the net income or it gives you the net loss. Very simple to do. And if you notice, I call them expenses. If you have if you own a non-for-profit corporation, that will be expenditures. And the chart of accounts, this is what's called a chart of accounts, the type of accounts that you will be using. The chart of accounts usually is totally different than a for-profit corporation. Then, of course, we have the cash flow statement. This is just an analysis of 3 items: the operating activities of the business, activities included in the cash flow are investing activities, financing activities, and operating activities. And there are 2 methods to calculate the cash flow statement: the direct cash flow method and the indirect cash flow method. This is a little bit more complex, but we are willing to teach you how it is done. We teach you how to read it, but just to give you an idea, let's say this cash flow statement, it only has operating activities. It does not have any financing or investing activities, as you can tell on the top, because it says operating activities. What is that you do? You take the income for the period, in other words, at the end of the year, and you adjust. You take out the accounts receivable, you take out the credit cards, you add, in this case, you know, the individual had a PPP, so you add that back and you deduct the payroll liabilities. That will be the net cash provided by the operating expenses. In other words, $25,179.72 minus the 85 is going to give you the net cash increase for the period. And then the 3,330.6 is from the prior period, in other words, prior year. So your cash at the end of the period will be $12,189.98. And this is what small businesses use. Okay, this is how much cash I have available to make decisions to whether I'm going to go into investing or whether I'm going to go into financing, or should I buy more merchandise for resale. But before you buy any merchandise, you should know, and you should find out what are the demands of your clients. What's the probability of you being able to sell whatever you want to buy with the cash that you have at the end of the period? Do's and don'ts of accounting. Learn the basics of accounting. That is where we come in. Find an accountant that has an experience in your industry. It's very easy to find an accountant. You have to do your due diligence to find the accountant, and don't be shy, just ask them the questions. What is your specialty? Then find the accounting software that meets your business needs. If you're a small business, I have some of them, they're so small that I tell them, don't even buy QuickBooks. Do it in Excel until you can afford it, because nowadays QuickBooks has is a subscription, meaning you had to pay monthly. And if you don't have that many activities, if you have 5, 6 invoices and maybe 10 expenses, there's no need to pay it on a monthly basis, a subscription. This is very important. Do the bookkeeping yourself at the beginning to gain knowledge of what is going on in your business. If you're a small business, it's better that you learn how to do it. I'm not saying go and spend a lot of time doing accounting. I said 1 hour, but learn how to do it, because you can be misled as to, how, in reality, how the business is doing. And that's the beauty of you finding us, because we can teach you how to read those financial statements and teach you the bookkeeping. I am a strong believer that if I teach you how to do it, you don't need me anymore. You can do it on your own. Set up internal controls to avoid errors. These are the errors. If you hire someone, make sure the person likes to do bookkeeping. Because if that person doesn't like to do bookkeeping, it doesn't know how to do it, it's going to mess up the books. And then guess what? You're going to have to go back and do it yourself from the beginning again. Rely on your accountant to work with you to separate accounting department responsibilities and duties. If you're a small business, you wear all the hats: accounting, financing, sales department, inventory, everything. You do it yourself. But if you are growing, you need to break it down. And accounting is one of the departments that should be one of the first ones in. I would not say marketing is first, because I'm not a marketing person, but accounting is important. Maintain records. I go back to paper, but guess what? Having paper is good, but also digitally. You need to scan everything nowadays. And now with the cloud and all those wonderful things, it's better to keep it that way, because they don't get white, or they don't disappear, because the ink of some receipts, they disappear after a couple of months. The bank account statements are easy to do. You just download them from the bank statement, the credit card statements as well from the bank account. And the employee's timesheets, very important. If you have employee, and even if you write in a napkin from what time to what time they work, keep it. Do not destroy those documents. I have seen many audits where they get in trouble for not keeping the employees' timesheets. Do not operate without a budget. So if you want to operate with a budget, might as well do the cash flow statement, see where you stand. Do not run your business based on your bank checking account balance. What does the small businesses do? They go to the bank account. Oh, I have $1,000. Okay, I can spend on, and they go and spend money. Use funds allocated for a purpose to pay expenses because you're short of money. If you're selling an item and you are collecting sales tax for the Department of Revenue, don't use it for something else. That money does not belong to you. It belongs to the government. And you have to remit it to them. So just because you're short of money, you need to plan. You need to plan what you do with your money. Do not mix your assets with the business assets. You are one person, you're one entity. The business is another entity. This thing of, oh, I'm going to take $100 because I don't have to pay the electricity. Well, take a distribution, but don't go on a loan program with your business. Two entities, two complete entities. Do not work on assumptions. Do not work on the assumption that you're going to sell $10,000 next month and you're going to spend $5,000. That's not reality. Do not make verbal contract on important business purchases. Well, nowadays, that's a little bit irrelevant, because when you go and buy a computer, they're going to give you a receipt. And back then, years ago, it was just a word of mouth. Oh, give me the computer, I give you this, and verbally, not anymore. Do not wait to build credit until you need a loan. If you plan in the future, work on your credit, pay your debts, have good credit. That is like having to eat every day, because when you need it, it's there for you. Do not disregard your accountant's or lawyer advice on financial matters. Pay attention to what your CPA and accountant tells you, because if they do that for a living, it's for a reason. And they know, and they can teach you. Pay an invoice without verifying you received the goods and services. In other words, if you get an invoice, but the merchandise has not arrived, don't pay it until you literally can see the merchandise. And then you said, okay, I received it. Do not enter bills, enter invoices, pay bills, or apply payments, and reconcile the books. Do not do that unless you're for sure you have the invoice, you're sure you have the bill to get into the, again, I emphasize accrual basis of accounting. How do you find a CPA, an accountant, or a bookkeeper? Ask your friends, ask your fellow business owners and your network. Say, hey, how's your accountant? Is he good? Does he take a long time to do the work? Does he answer the phone on time? Does he reply to your emails and make a decision? Visit the American Institute of Certified Public Accountants directly. I believe we also have a small list of CPAs and I believe accountants that the FIU provides. We do not claim that they're better than anybody else. It's just a referral so that you can go talk to them directly and ask them. Now, the first question should be, do you charge for me to talk to you for the first hour? Or can you send me a list of your prices? How much you charge to prepare the payroll, to prepare the tax returns, to prepare whatever tax document they're preparing, you need to know how much it costs. And also make sure, like I mentioned, I believe before, make sure you know if they have the experience in the industry that you're in, so that you can benefit from their knowledge. Now, you also need to determine whether you need the accountant or the CPA just to file the tax returns or to do the bookkeeping, because if you're going to pay the bookkeeper, they're going to charge you. And usually the monthly fee is on a monthly basis, plus the tax returns. So communication with your bookkeeper, accountant, or CPA is very important. And this goes back to what I mentioned before. Who will do the work? Hey, Mr. CPA, are you going to do the work? Oh, yes, you are. Okay. How much are you going to charge me per month? How much are you going to charge me for the tax return? How am I going to get you the work to you? Nowadays, it's all Zoom or face-to-face or by phone or through the cloud. I'll drop up the papers and I get them. How often will we communicate? I recommend to communicate with your CPA at least once a month, just to see where you stand. How will the CPA, bookkeeper, accountant will bill you? It will be a lump sum at the end of the year, monthly at the beginning of the year, or monthly at the end of the month once the work has been done. And I emphasize, learn to speak their jargon, learn to speak their language. And we're giving you a beautiful SBA link where you can learn the financial terms, the business financial terms. Do you have any questions?
Yes, Lillian, I have one question for you. So what if you're working a corporate W-2 and also have a small LLC business owner? How does this impact the IRS tax filing?
Could you repeat the question? The is a
Yeah.
company that has a W-2.
Yeah, so what if you're working a corporate W-2 and also a small LLC business owner? How does
Okay,
this impact the IRS tax filing?
okay. If I understand the question, this person works for a corporation and gets a W-2, but at the same time, she owns a small business as an LLC. If that is the question, the
Yes.
W-2 on the 1040, it will be listed on line 1, and most likely they would withhold the federal taxes. The LLC, on the other hand, the IRS code says that you do not have to be in payroll. Therefore, if you make $1,000 in revenue and your expenses is $500, you will pay taxes on the 1040 for $500. And the IRS, they only charge you for half of the Social Security and the Medicare because there's no need to withhold 15%, but just half. But then again, it goes into the process of all your standard deductions, all your other expenses, all your other income on your personal tax return that it will affect. But it will be on the net income that you will have to pay. And if you have a net loss on the LLC, that gives you a benefit, is a deduction on the taxes as well.
Okay. Okay, I don't have, okay, I have another question. Okay. They said thank you. Yeah, so if you have any questions, I encourage you to put them in the Q&A and I'll be able to moderate them on your behalf. Also, like I said, feel free to like and subscribe to our YouTube channel, as this is where we'll be able to upload the presentation later on, once we receive the video file. But at the same time, I will also email you directly the upcoming events that we have. February 9th, it's going to be a really good one, which is small business tax considerations that Lillian will be going over more in depth. And so this is like a tie-in based on today's presentation. So definitely encourage you to register. And I'll be able to connect you with Lillian, also with our other business consultants, if you're interested to meet with our business navigators as well.
Jesus, I'm sorry
Yes,
to interrupt. I just saw a question in there about a
yes,
subcontractor.
yes,
Okay,
go for it.
the way,
So just to say for everyone, what you have a independent contractor that works for you, should I proceed?
okay. When you have an independent contractor, make sure, and I beg you to do it, because the IRS will, slap you in the hand with a little notice from the IRS. The 1099s are due January 31st of this month. So whatever you do, make sure you issue them a 1099, whether it's a miscellaneous, as if it is an NEC, I don't know, which one you have to do, but you should do it. You should do the 1099s before January 31st. And make sure you have a W-9 on file for this independent contractor, because it would give you the full name. And usually I tell my clients the full name as it shows on the Social Security, their address as it shows on the driver's license, and the Social Security number as it shows on the Social Security card.
Okay, I have, okay. Now, same question, W-2 corporate, but owns an S Corp, not LLC. Is that
Okay,
the same question?
the principle is kind of the same. The W-2 goes on line 1, and the S corporation is going to issue the person a form, which is the letter K and the number 1. It's going to get a K1. It's going to be an 1120S K1 that's going to be reported. It flows through to the personal tax return. The corporate itself files a tax return, form 1120S. But the corporation gives the shareholder a K1 that flows through to the personal tax return. And it will be the same principle. It will pay taxes on the net effect of line 1 of the K1, or it will be a net loss of the K1 on line 1. Either way, you either gonna have to pay taxes, or you're gonna get a little bit of a break by not having to pay so much taxes if you have a net loss.
Yeah. Should I have two separate returns, one business and one personal?
It depends on the type of corporation you have. What do you have?
All right, we'll follow up with that question once I receive your response. Okay, so I have another question here. My question is, the LLC pay taxes in the head of its member. The money to be paid, those taxes must be part of the member investment, or could it be paid by the LLC?
All right. If it is an LLC, one member, meaning it's going to flow through, like I said before, to the 1040, right? So who's going to pay? The individual. Now, if the LLC is a partnership, or the LLC made an election to be treated as an S, either it's a partnership or a S corporation, S status corporation is going to get a K1 and it's going to flow through to the individual anyway. So guess what? The individual is going to pay or get the benefit if they are net losses.
Yes, the LLC, which also is listed as a S corp.
Okay, so it's treated as the LLC make the election to be treated as an S status. So therefore, the corporation is going to be filing a corporate tax return. And the corporate tax return that S status corporation is going to give the individual or the member, in this case, the K1, that flows through to the 1040. Which means who's going to pay? The individual. Or who's going to benefit? If it is a net loss, the individual.
Okay. What if you have an LLC that is set up as an S corp for tax purposes? Can you be on payroll? How would that be treated differently?
If you have an LLC and you're treating it as an S status corporation, yes, you can be in payroll.
Okay. How can I do bookkeeping on a MacBook? Lillian, you're so knowledgeable. However, don't use a MacBook with QuickBooks.
Well, let me tell you, every time a person tells me they have a Mac, I kind of go back, unless they have a Mac and they have QuickBooks Online, because it does not affect anything, right? Mm-hmm. But if you have a Mac and you have a QuickBooks desktop, I will have a hard time helping you because I hate it, but that doesn't mean I cannot help you. I wouldn't be able to help you as fast as I could because all the work has to be done by you. I will be able just to have a Zoom call with you and show you, oh, click here, click there. And let me tell you, I'm really bad at Zoom, and thank God Jesus is good at it, because every time I start perspiring because I don't know. That's the same principle with the Mac with me. But I do it, but it's more work for you. It's more work for you because I'm not going to be able to help you. Do not get a Mac and do not get QuickBooks desktop for a Mac. That's just my personal opinion.
Okay. I have two questions. I file separately, business and personal under S corp.
Well, that's the way to do it.
Okay.
The S corporation files a corporate tax return. It gives the person a K1, and the person has to include the K1 in his personal tax return. The S status corporation and the LLC is a flow through to the individual. Mm-hmm. Now, the conversation that you should have with your CPA, accountant, and bookkeeper, especially someone that has experience and who is a tax practitioner, is why would you get an LLC and make this status to be an S when they're both flow through? Unless you're going to be in payroll because you're buying a property and the banks require, they feel more comfortable if they see a W-2 because they know they had to take out the money, they know they have to pay taxes on it.
When I open an LLC, do I have to decide if I want it to be an S corp right away, or can this change be made already established LLCs, let's say 2 or 3 years down the road?
Okay, this is how it works. When you register an LLC and you go with the state of Florida and you go and get the federal ID from the IRS, one of the questions is how many members does the LLC has? Let's say you say one member. automatically you are considered LLC one member, meaning you will file a Schedule C as part of your tax return, the 1040. Now, let's say you make the decision that you want to be treated as an S corporation. You have 75 days from the day you get your federal ID to make the election through a form that needs to be filed with the IRS to become an S status corporation. And you can do the process, like the questions say, 3 years. Every year, the first 75 days, if on the first year you decide not to do it, the second year you don't decide to do anything, the third year you don't decide, you have 75 days of every year to make that election. Except that on the first year, you can do it the same way, 75 days. And if you forget, if your accountant or you forget to tell your accountant, we can, a form is filed to say to the IRS, please forgive me, I forgot to send the form, the request, and the IRS will accept it.
Okay. I could ask, I could answer this question. Is there a class on this with the SBA? And if what's the cost? You could definitely register with the Miami-Dade Business Navigator program. And Lillian and other business consultants can guide you through the process of financial management to understand your full financial books. To provide the what's next. Is it more for capital needs? Is it more the operation growth? To understand your finances for growing for new markets. Like I said, we have consultants that can guide you through the entire process. Once again, no cost to you. So it's a great opportunity for you to take advantage. Lillian, if business is a corporation, can sole proprietor be in the payroll?
No need. Remember, sole proprietors is the same thing. Sole proprietors mean you do not have an LLC registered. If you have an LLC, one member, you're going to file a Schedule C as part of your tax return. If you're sole proprietor without the name, without registering a corporation, you still have to file a Schedule C as part of your 1040.
Okay. With the 75 days, can you go back on the decision the year after, back to just LLC?
No. The IRS gives you kind of, I'm going to call it like penalty type of thing, that the IRS says, hey, you decided to be an S. Oh, perfect. But you're going to be an LLC, you're going to be an S corporation for 5 years.
Okay.
And then you can go back. It's like I call it penalty, but it's just the IRS code.
Get you. All right. And then if anyone has any additional questions, I encourage you to put them in the Q&A. Also, I'll put my email address as well. So in case if there's any additional questions that might pop up, feel free to just shoot me the email and I'll be able to relay the message to Lillian. When should I go from sole proprietor to LLC?
Why should you?
No, when?
Whenever you want, whenever you're ready to register a corporation, whenever you are ready to renew every year, because in the state of Florida, you have to pay the renewal. And mainly you have to consider liability. Why would you go into an LLC or status S when you had to now, accounting has to be done, no matter whether it's an S corporation, a partnership, or sole proprietor. The accounting has to be done, but it's the cost of the filing of the corporate tax returns. When my advice is always wait and don't do it. Like last year, I was having a lot of clients that wanted it to register it like in December. I said, no, don't do that. Wait until January. So shout out to my clients that they said they were coming on January to register, because I did not let them. I said, why would you have to pay the registration now and January comes and you had to pay the renewal? Do it at the beginning of the year and you save yourself either $150 or $138.75, which is the renewal fee every year that you have to pay when you have a corporation or an LLC.
Okay. Yeah, so we don't have any additional questions. So I want to thank you all for attending, along with Krista Hermanton from a Startup FIU Local. for co-hosting this exciting webinar. But like I said, we'll be in communication with the upcoming events. Also our contact information. So if there's anything that we can do to assist you, don't hesitate. We're a phone call or an email away, and we'll be more than happy to assist you. So I want to thank you all for attending once again. Yes, everyone is going to be receiving a copy of the webinar, of the presentation, and the YouTube link once the video file has been uploaded. So thank you all once again, and I'll see you at the next webinar. Have a good day.
Bye. Be safe, everyone.